What an insane destruction of value. All the altcoins are going down. Bitcoin within the last few days dropped by 35%. And the question is, at what point does it make sense to buy this dip? Now the market is absolutely scared. What we see over here is the stablecoin dominance. How much of all of crypto is currently in stablecoins? And that is now at 10%. It's at the highest level for the last 2 years, and there is an inverse correlation between the stablecoin dominance and crypto prices. As in, whenever there is low stablecoin dominance, there is very little dry powder on the side. All the stablecoins have been deployed, and so crypto prices tend to be high. When there's very high stablecoin dominance, that means it might make sense to buy the dip. Unfortunately, we have broken out of this sidewards trading range, and the question is, how much higher can we go? Because historically, we have seen higher levels in stablecoin dominance. The highest was at around 18%. That was when Bitcoin's price was close to 20K. Now, if you've been following this channel for a while, you're hopefully now in short positions. I've been betting on falling prices since the end of October because that's when we fell below the 45-day simple moving average. So that's the line in orange, and the 125-day simple moving average. That's the line in turquoise. Historically, those two moving averages work the best. So we always want to follow the trend. We want to bet on rising prices whenever we are above, and we want to bet on falling prices whenever we are below. And because we went below both of those moving averages at the end of October, we are currently making money with this drop. Now have a look at the following. What we see here at the bottom, that's the 1 year rolling return. So the line here at 1, that shows us when Bitcoin returned exactly 0%. It made a 1x in the last year. When we are at a level of 2, that means that Bitcoin has doubled over the last 365 days. And so with the current correction, we are obviously in the negatives. But how much lower did we go, historically speaking? The answer is quite a bit lower. At the end of a bear market, we tend to be at an ROI of 0.3. So there was a 70% drop in the last 365 days. And that's usually the absolute bottom of a bear market. That's usually a very good time to buy, but we are still far away from that bottom. So while this is feeling painful, it's not historically low. We have dropped way further and way more aggressively in the past. This might just be the beginning. Now, we've already talked about how the 125-day simple moving average is one of the best in Bitcoin. The question is, are we potentially too much extended from that moving average now? Because we'd still be bearish even if Bitcoin was to rally by 20 or 25% from here. How much do we historically extend from that moving average to potentially then see a turnaround? That's what we see with the line here at the bottom. And again, unfortunately, the answer is that historically, we have been more extended from that moving average. Whenever we cross the horizontal line here, that means we are also crossing the 125-day SMA. So again, while this might feel quite painful, we have seen way stronger extensions during prior cycles. Again, indicating that this might be just the beginning, that maybe this is not the best time to buy. This correction is already atypical. The stablecoin dominance is much higher than it ever has been over the last 2 years. So since Bitcoin hit the 30K mark, roughly. And still, even with the correction, the majority of Bitcoin holders is still in profit. This is the net unrealized profit and loss, and that's currently at 35%, plus 35%. So historically, it was the best time to buy when the average Bitcoin holder was actually in losses. Currently, there's still some more way to go until we see a historical buying opportunity. Now, why are we seeing this price depression? It's because of selling through the ETFs. So we have now seen quite a bit of a drop, very comparable to March of this year. And at the same time, the treasury companies are not picking up the slack. And so there's net selling, especially the long-term holders. They continue to sell. So everybody talks about the halving and the 4-year cycle, etc. But really, the halving doesn't really matter that much. The issued Bitcoin isn't really that much compared to what the long-term holders are moving. When long-term holders are buying, we tend to see an end of a price depression. When long-term holders are selling, we tend to see an end of a rally, and they are selling for quite a while, since Bitcoin hit 120k, and they continue to sell, and that is the big problem. I am personally only going to buy once the long-term holders stop selling. When this turns blue again, that's a good time to potentially enter. That's maybe also a time when the stablecoin dominance is at 12%, maybe even 14%. I do not think that this is the end of this crisis. I do think there's more pain ahead. Let's see what is selling off the most. The others dominance today is going down by 2%. The Ethereum dominance is going down by 0.25%. The Bitcoin dominance is going down by 0.14%. So all of crypto is going down. The more risky the asset within crypto is, the more it's falling today. But everything is falling because of trading towards stable coins. People are swapping into stables. People are freaking out. And it's not yet direct outflows out of the crypto space, as in the stablecoin dominance is high, but the stablecoin market cap simply just stopped growing. So it's not yet coming down as it did after the Terra Luna collapse, right? This was Terra Luna and FTX. This is when crypto actually shrunk, when the stablecoin dominance went down, when money was flowing from the crypto ecosystem to the traditional finance system again. We have already stopped growing for quite a while. So the rally started in October of 2023, and we have stopped growing in the stablecoin market cap in October of this year. So 2 years of expansion. And the big question really is, are we going to see some money flowing again from traditional finance into crypto, taking advantage of those low prices? I personally doubt it, but I will continue to monitor this. If this does not grow until the end of the year, if we have a sideways trading activity with no inflows into crypto, then we might drop further and further. Really, Bitcoin wasn't that great of an investment already for the last 8 years. This is Bitcoin relative to the Nasdaq 100 or Nasdaq 100 ETF, right? QQQ. Bitcoin hit $20,000 over here at the end of 2017. And since then, it has not really outperformed technology stocks, but it did have much more volatility, right? It had those 80 and 70% drops without getting any outperformance. So when you don't get any outperformance, but you do get much more volatility, is it really worth holding an asset long term? Or is it maybe better to just try to time the market, to only buy the asset when it's extremely depressed? I think probably the latter is the case. Now, when is Bitcoin extremely depressed? Maybe when the average holder is in losses, when we are below the realized price. So that's the average cost basis of the market, which is currently at $56,000. If you want to be a bit more cautious, we can also just buy once we hit the long-term holder realized price. So at the end of a bear market, we tended to hit that price level as well. And that's unfortunately only at 38K. So that's how much we could potentially fall from here. The risk to reward, I believe, is currently not worth it. The momentum is very, very bearish. People are selling. The more risky the asset is, the more it gets sold off. And while there is a lot of money on the sidelines, we have seen way more pessimistic times in the past, way higher stablecoin dominances. And that would then lead us below the average cost basis. And so really the main indicator I'm currently looking at is the long-term holder supply net position change. If the long-term holders stop selling, it might make sense to pick up the pieces. It might make sense to start with some speculative bets. But until that happens, I'm just following the best moving averages. They historically worked very, very well. Here, just have a look at the back test. So buying and holding is the line in white, and the back tested performance of that strategy, that's the line in turquoise. And so if you want to make money with that strategy, you can also check out the premium membership. So that's down below, thebitcoinstrategy.com. There is a capital pool where we follow that trading strategy. And as said, we are currently making money from that crash. If it's your very first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube, or see you in premium. Cheers.